a Surrey condo developer recently grabbed attention by advertising newly built move-in ready condos at 25% off the list price. Mark Ting, our personal finance guide and partner at Foundation Wealth, joins us to discuss whether this is truly a great deal or just an overpriced asset finally correcting to market value. A question for the ages. Hello, Mark.
Hi.
Thanks for coming in. So I think a lot of people are side-eyeing this. Was this a genuine discount, or was it like many other promotions where only the first few units are heavily discounted and the rest are sold at regular prices?
No, I'd put it in the legitimate category. Okay. Yeah, they're selling about 78 units, and I think most of them sold on the first day, like 60, 80 of them or something like that.
Okay.
So, 25% off. That's a good deal.
That is a very good deal. That's a significant
$1 million unit goes for $750,000, couple $100,000 savings.
Yeah.
That's enough to push some people off the fence and actually sign on the dotted line.
And then I guess the next question is if this was a one-off, or if buyers can maybe expect similar deals in the near future coming down the pike.
I don't think it's a one-off. I think we got more of this to come.
Okay.
So I was looking at it, and I was looking at the stats. There is a lot of unsold, ready to move in type units out there. We're talking about in the thousands, and it's just not stopping now. They're ongoing. They're going to be coming online for the next year and a bit. I've already seen another advertisement, 30% off. So they upped it by 5%.
Wow.
If you're interested, it's in Tawasin. Aquilinis are selling it.
Okay.
And then, of course, it's not just like these percentages off. There's all these other types of incentives that are out there. $100,000 off units, free parking spots, free strata. So these are all indicators of a very strong buyer's market. People have to move inventory, and they're putting their best foot forward.
Now, I'm assuming if they're knocking 25% off, the price, that they're not going to lose money on it, the developer that is. So if they're cutting 25% off to, say, break even, is that what their profit margin typically would be, 25%? Or is it way more than that, and this is just a drop in the bucket?
No, it's actually, I think that's overstating it.
Really?
So going back, you got to think about a developer. So they buy these projects, the property, they go through the project like a decade earlier, and then they set the prices. Typically, when I speak to developers, they will go forward with a project if they make about 14%. So that's sort of the profit margin at minimum they're looking for. They would love to get 25%, but you're sort of forecasting what's going to happen by the time you buy, market, and then sell, and then complete. And typically it worked. They made a lot of money. Developers did very well. But nowadays, because the last 5 years have been very unpredictable, interest rates going different places, markets coming down, not moving, you're seeing a lot of developers actually going bankrupt. So in this case, I think what happened is typically they would pre-sell everything. Not everything, sorry. They'd pre-sell a large amount in order to get financing, go ahead with the project. They would generally keep back a couple units and sell them at market value because they would benefit from the lift. There was no lift in this case.
Gotcha.
So it's not only developers, though, because there's a lot of people who buy these things, speculation, investments. They put down payments, never really expecting to complete on them. They wanted to flip the contract, make a quick buck, do whatever. And a lot of those people are walking away from their deal. So they're walking away from their deposits, which could be up to 20 to 25%. So the developers get that money from the people who walked away. And now, of course, they can sell those units with this little bit of a buffer because they got the money from the deposits. But I think across the board, they're losing money on all these units.
But that has got to be super frustrating for the people that did buy pre-sale. Is there no compensation for them if others are getting it at a deal, or is that just buyer beware strictly?
Buyer beware, FOMO, whatever you want to say.
I guess
these are adults who read contracts, who agreed to things, and they wouldn't be crying if they made a lot of money.
Well,
right?
That's true too.
So as an investment, you got to go with the good and the bad. But what's frustrating for them is not only is their unit, which a week ago we'll just pretend $1 million, and now you can get it for $750,000. If you're comparing a brand new buyer, the person who bought it for $1 million has to pay GST. The person who just bought it recently at a discount doesn't have to pay a GST. So it's a double whammy for them.
Yes, it'll be a bit tough to fall asleep some nights, I think. In the past, you've said it's a buyer's market and recommended making aggressive offers. Would 25% off the list price qualify as a stink bid?
Well, for the type of product that we're talking about right now, obviously it's it's the norm. We're talking 25%,
Yep.
30%. But if you actually went out there and you're buying like a resale type of a product, like a condo or a house, and you offered 25% under list price, even now, I would say that the sellers would be looking at you with a side eyes like, hey, come on, like do a real bid. Let's be serious here.
That is what I figured you were going to say, because it is aggressive.
But they still want them because it is still a starting point.
Okay.
And I can give you one example. Like the last property I bought was in 2019 before COVID, and it was listed for $2.2 million. It was a duplex, both sides in Mount Pleasant. And I ended up getting it for 1.45 million. So
Okay.
from 2.2 to 1.45, partly because I think it was overpriced to begin with, but I gave very bad offers and bids, but they still took it because the house was in disrepair. No one else wanted it. And at the end of the day, it was an estate sale where there was like many family members involved and they were all fighting. And eventually they said, forget it, just get rid of it. And they sold it to me for a pretty good discount. So I still believe in making these stink bids, even depending on the market. But if you're going for a new product right now where there's lots of inventory, negotiate on everything. Like developers are negotiating. People think you can't negotiate with a developer, but you absolutely can.
Especially now. What are some of the common mistakes other than that buyers make when negotiating in a buyer's market?
I think they wait too long. They think that if the longer I wait, prices are going to keep coming down and I'm going to time the bottom, and that's just impossible to do.
Okay.
The other thing that they often do is they do absolutely nothing because it's almost way too many options. Like during a FOMO type of a thing, you just buy and you just hope for the best. But in this case, there's so many options, so many different things. It's like paralysis by analysis, and they never actually sign on the dotted line until everything smooths out. People always say that. I'm just going to stay on the sidelines, wait till everything's calm and normal, and I can realize what's going on, then I'm going to buy. Well, by that time, you've already hit the bottom, you've rebounded, and you're going to pay a higher price. So I generally said strong buyer market is when the uncertainty is at its highest. You often get the best deals. It might not look like that today. It could keep going down for another 2, 3, 4, 5 months. But if you're going to live there for multiple years, it doesn't matter. Even the people who bought at the peak, probably if they lived there for 5, 6, 7 years, they're going to be above water. They'll probably be fine, and they had somewhere to live.
All right. Well, so nice to talk to you again, Mark.
Thank you.
Mark Ting is our guide to personal finance and a partner at Foundation Wealth. He joins us every week at this time.